continue this awesome Q&A with my top student, Tim Grittani. He just surpassed me in total trading profits, nearly $5 million now in 6 years. We also just opened his first school. I now have 35 schools with my own charity that are built or in development. I got tired of naming them after myself, so now the Tim Grittani School is officially open here in Bali, and now it is my privilege to do a Q&A specifically for you because we get a lot of questions and I just want to go through a lot of them and just answer them. So the first question that we got is, how much should you start with when you're opening a trading account? Tim Grittani thinks that the ideal amount is $3,000. Listen to his answer explaining why. You were saying about $3,000 is your minimum.
Yeah, I think 3,000 is a good amount because, you know, it's a really delicate balancing point where I say, you know, you want to trade small so that you're not all in, you're not putting crazy amounts of money on the line, you're not going to lose past a recoverable amount. But at the same time, you need to be able to trade big enough to overcome commissions because, you know, if your broker's charging you $10 an entry, $10 an exit, which is probably too high as it is, but that's about what it was for me when I first started. I mean, you need to take at least $1,000 positions just to have a shot at breaking even, really, you know? I mean, $1,000 position, $10 entry, $10 exit means 2% just to break even. So big enough to overcome commissions, small enough not to be risking ridiculous money when you're just starting out and really have no idea what you're doing.
And I like that too. You actually need $2,000 in order to short sell. That's an SEC rule. And I agree with the commissions thing, although there are brokers. I mean, with E-Trade, I pay $5 a commission, so $5.
Yeah, they just lowered. That's right. Yeah, they're a lot better.
They lowered it. I would be very careful with free brokers like Robinhood, where they just have terrible service, terrible executions. You will lose so much, and if you have no, you know, commissions, like you're tempted to trade all the time. With great power comes great responsibility, and when you're just beginning, you don't have that responsibility. You don't have the knowledge of knowing which trades to take and which ones not to. If there's no commissions, you're just like, well, it costs me nothing, might as well do this, might as well do that. With Robinhood, I have heard so many horror stories. Please, that's another question that I'm gonna answer, okay?
Okay.
No Robinhood. It's good to have a little commissions. And the PDT rule is good because it prevents you from over trading. So many newbies overtrade. You think like, okay, I'm learning, I gotta trade every single second, try this, try that. You need to study every second. Study the past. As a newbie, I think like when I say no days off, it's not no days off from trading, it's no days off from studying. Like as a newbie, you're behind. You know, you need to learn from the past few years so you can see, wait a minute, here's a trend, here's a pattern, here's something that I can actually do. What do you think about studying?
Oh, I think it's huge. That was a big part of what really helped me along. I mean, same sort of thing, looking at the past. Like at the time, I was really trading pump and dumps a lot, just the blatant scams. And a big part of my studying was going back and just tracking promoter history. You know, like awesome penny stocks back then. Like I went back through all of their old picks. I was trying to figure out how they performed, how many days they ran, like any little edge I could try to find. And a lot of stuff I looked at, it didn't pan out, but it's okay because a few things did, and that gave me the angles I needed to attack and start growing my account.
And if you start looking at patterns like that, like that's the key, like looking, okay, this pattern runs for 2 or 3 or 4 days. Like we see it repeat again and again, the marijuana stocks, the Bitcoin stocks, the police equipment stocks, the shipping stocks. Like you see these patterns, but you have to ideally, you know, witness it in person, because you can look back in history and you're like, oh, it's so simple.
Yeah, it looks obvious in hindsight, that's for sure.
But when you see it in real time, it's a little different. But at least studying the past can help prepare you, okay, this sector can run for 2, 3, 4 days. So we both profited the past few weeks off the Bitcoin mania.
Right.
And it's the same exact kind of hot sector momentum that we've seen in the past. So a lot of people weren't prepared. I'm not saying Bitcoin is good or bad. I'm just saying it's the hot sector right now.
Yeah, in the hot sector, I mean, there's at least a couple a year, it seems like. And I mean, for me, every time a hot sector comes along, especially with these OTC stocks, it's really the same 2 strategies for me. I buy the breaking out charts, and then I short sell them once they get overextended. Like I'm just doing the same thing over and over. It just changes a little bit to the specific ticker, and you know, whatever price levels I may feel are key.
So it's a lot of rinse and repeat. And this is what I think is so key about studying the past, because there are slight variations, nothing is exact. But, you know, a lot of people say, oh, promoters don't matter anymore, so I'm just gonna ignore that. That's not true. That's history that you need to understand. How did the promoters used to work? How did this pattern used to work? That's history.
That's no different than, you know, if you're a history buff like me, you're studying like the Roman Empire or the Greek Empire. True, they don't exist anymore, but that doesn't mean you can just skip over it and graze over all that education. You know, there's so many lessons from the past. So even though right now promoters aren't in play, maybe they'll come back in the future.
Yeah.
And you can learn how, you know, he made a lot of his money. I made my first million buying promotions too, even though I didn't even know they were promotions. I was just buying the chart patterns because I was an idiot.
Well, and it kills me because all the time, like you'll see OTC, it's not what it used to be, sure, like I'll be the first to admit that. And we'll get times where it's really quiet for a month or two. And then you get all these people commenting to me saying, oh, OTC is dead, like there's no point knowing this anymore. And then something like the Bitcoin sector heats up and everyone's helpless and has no idea what to do because they didn't prepare, they just made their assumptions.
You don't want to be unprepared when the next hot stock comes, when the next hot sector comes, okay? You can't control it. A lot of people were asking me on the webinar, I gave a trading challenge webinar, and they're like, when is the next hot sector? Like, how often does it happen? And I'm like, you have to get away from thinking that you're gonna get like bi-monthly paychecks. Like, you don't get paid like a normal job in this. All you can do is prepare, and some days there'll be no trades. Sometimes, you know, for a week straight, there'll be a great play every single day. The problem with you guys is many of you are unprepared when there is a great play. So it's our job to help prepare you, to help you get, you know, as ready as possible. And you can never be fully ready, but the one thing that you can control is your studying. You can't control when the next hot play is gonna be.
Yeah, I mean, the best day traders I know, we're reactive, we're not predictive. It's, you know, we react to the best patterns forming and then we know what to do. We react to seeing, hey, this sector is heating up. But we don't sit back and guess and say, oh, I think marijuana is gonna be huge in 2018 and then start scooping up marijuana stocks and hold them for 6 months. That's not at all what we do. So learn to react, not predict.
That's gonna be tough for a lot of people because, you know, everyone's like, oh, Bitcoin, I think it's gonna be amazing, or Bitcoin, I think it's junk. And they get stuck in this narrow-minded thesis where whatever happens, they're like, the market is wrong, I'm right.
Well, it's an ego trip. It's like you want to be able to call it and then brag about it. Like, I was the first to see it. And
Yeah.
I get caught up in it sometimes, but it's not going to make you money. It's not going to get you anywhere. It's not going to help you be consistent. So you've got to really break away from that kind of thinking.
All right, we got that out of our system. Let's get to your questions.
Our juices are here.
Ah, nice,
Thank you.
Cheers.
Cheers.
Beautiful. Cheers to you guys. I've heard this juice is good.
This is good juice.
Wow, good job, Kevin. Good call.
Great recommendation.
Our filmer is multi-talented. It looks kind of weird. It's kind of a weird color.
It's like watermelon mint, lime.
I mean, it makes...
This is what it should be.
It makes sense. I just thought that it would look different. Sorry, we have to refresh. It's like 100 degrees here. The number one question we got was, what advice do you have for a 13-year-old?
Go outside and play. No, I mean, it's what brokers will even take a 13-year-old? That's what I don't know. Like, if there's a broker out there, I guess no harm in starting out small and trying a little bit, but I mean, I don't think most of the brokers that will really have the shares to short or let you, you know, trade with any kind of size, I don't think they'll have an age requirement that's very friendly to you. So, I mean, if you're really determined to get an early start down this path, put your focus towards the studying, learning past patterns, and when the time comes and you're old enough, be ready to go.
Listen, I commend you guys for starting young. I got started in my teens, maybe not 13. You know, 13 I was getting my bar mitzvah money, then it was just sitting in Series E bonds for no reason for several years. So God bless you, 13-year-olds, 12-year-olds, 11-year-olds, 10-year-olds, 9-year-olds. Fantastic. Start studying. Don't play with money. It's dangerous. If you study, then that will only help you later on. And if you're under 18, in order to do this stuff, you need parental permission, okay? I'm not just teaching random kids out there. Like, I'm not gonna have a bunch of kids being like, oh, let's go trade penny stocks. Like telling your kids to stop playing Pokemon or stop going to school and they're gonna trade penny stocks. That is not what I want.
You know, I've got to give props though. At least they're looking at stocks. Like when I was 13, I was getting into poker, and poker was terrible odds. So
I'm giving you guys props, you young ones, but get parental permission. This is a legal requirement. You need parental permission. And remember to drink your milk and brush your teeth and go to bed early too. It's good to get started young. If I had it all to do over again, I don't know if I would probably start at 13. I would do a lot of things differently, 13 to like 18. But if you get started at like 18, 19, 20, I think that's a good time to learn. Most of the best traders and investors become really good like in their 30s, 40s, 50s, 60s. You don't find that many 20-year-olds until recently because technology has improved where we can teach you like this. I mean, it was very tough for me to learn back in 98, 99. There were no books, there were no video lessons, there was no online video. So it's gotten easier, and you've had you've ridden the technology wave over the past 6 years. Upcoming students like Dux has benefited from all our webinars, like Stephen Dux started with 27,000, just crossed 1 million. He's watched all of our Trading Challenge webinars like 3 times. We couldn't do those webinars a decade ago. Now Roland, who just passed $200,000, started with 4,000. He watches everything, DVDs, online video lessons, webinars. So as technology improves, you have more and more content, more and more resources. So it's good to get started younger, but also go out and enjoy, okay? Like when you're that young, just live off your parents, like study, but don't focus on money. Like a 13-year-old with a lot of money, that's dangerous. I don't want 13-year-olds making that much money. I appreciate it, but also I think that the best lesson for a young person is that it's more important to develop good habits in the beginning than make a lot of money. Because you can make money by like going all in and being right, and that's a bad habit that'll cost you much more in the long run. So I'd rather you develop good habits, building your account slowly, learning to take singles, learning to cut losses quickly, rather than going for home runs. I know it's tough to fight that because you want to make as much as possible right away, but if you think in the grand scale of like your life, like 10, 20, 30, 50 years of finances, what can you do today that will benefit you 2 decades from now? The money that you made today will be irrelevant, but the habits that you create and the knowledge that you learn will serve you well in the future. What do you think?
That's very true. Like I remember my first couple months of trading, like I was making $20, losing $20. Like that is not very significant money, but it was that experience that really was worth the most.
Yeah, experience matters. So let's get to a question. Tim Grittani, out of all the DVDs and video lessons, what gave you that aha moment where it all just clicked? Chopper Trader, thank you.
I guess one of my first aha moments was the multi-day breakout pattern, and that was Penny Stocking Part 2, right?
Penny Stocking Part 2 is a must-watch. It's my best reviewed DVD. It might be a few years old, but all the patterns still work. It's crazy.
Yeah, I remember seeing the multi-day breakout in there and really liking the idea behind that pattern, just kind of the concept of why that breakout should continue to go up. It was where I poured attention early on.
Cool. For me, I actually did have one aha moment. Most of you will not have an aha moment, so don't look for like everything is going to be so tough and then one moment it's going to be like Neo in the Matrix and you're going to know Kung Fu. I think trade by trade will help you see the world better and see the opportunities a little better. For me, my first $100,000 profit day when I was a freshman in college and I bought this stock that was going to be on TV. I like buying upcoming news plays. People buy in anticipation, and they said they were going to be on TV over the weekend. This was during the internet mania. Like any new technology was just going to have positive news coverage. There wasn't any exposés back then. And they said they made cell phone coverage better on ISCO, Illinois Superconductor. The stock had gone from 5 to 17 over the week, tripled in anticipation of this. And I was very cocky back then. I put 3/4 of my net worth in there. I bought 10,000 shares at 17. It closed at 17 and a half, so I was already up 5,000 roughly. I was worth $250,000 at the time, so I'm betting 170,000 like an idiot. Don't bet that big. But they got the positive news coverage. It gapped up to the 29-30 area. I made 100,000 plus on that following Monday. I was like, I'm out. It kept going. It actually nearly hit 40 the next day. So the media lasted for 2 days, but just being able to make $100,000 in a day as a freshman in college, like that's what lawyers make over the course of a year. And even though I don't want you being that aggressive, even though that was the tech bubble, so it was a very specific time. Understanding that, and you had a $200,000 day, you know, understanding that you can make this kind of profits in one day, like, it makes everything else, like, puts everything into perspective, like what's possible if you have the right strategy and the right preparation and you're there. What did you feel like when you made your $200,000 in a day?
Oh, it was adrenalizing and exhausting at the same time. I had to go outside and take a walk. Like by the time I was done trading,
I did a lap around the quad. I was like, woo! Everyone thought I was crazy.
Yeah, I mean, it was really crazy to realize I could make that kind of money. The tricky thing is you don't want to start expecting that and pushing for that, and you know, just keep on trying, like, okay, well, next week I want to make 300,000. Like, that's gonna get you into a lot of trouble. So you've got to kind of also balance it with learning how to be satisfied, and not just always trying to set a new high score.
And mind you, you know, when he made $200,000 in a day and I made $100,000 in a day, everything lined up. Okay, very rarely will you have everything line up like that. For me, it was the tech bubble. The company announced they were going to be on TV, so if they're going to announce it, they were interviewed, so you pretty much know it's going to be positive. It wasn't a question of whether I was going to make money, it was a question of how much it would gap up. Because of the tech bubble, it was a home run. For you, you were trading FNMA and FMCC, right? Fannie Mae and
Just
Freddie
Fannie
Mae?
Mae,
Oh,
yeah.
just Fannie Mae? And there was extreme volatility. You can Google this, how to make $200,000 in a day. There's a great blog post where he's riding the peaks, he's shorting it, he's buying the bounces, like, there was so much volume and so much volatility. We haven't seen anything like that since.
That was what, 2013, and now 2017, 4 years later? Yeah, I haven't seen an OTC even
Nothing
close.
since. So understand that stuff can happen, but at the same time, a lot of people, I get this question, I'm gonna add my own question here is, you know, how do you set goals? Like for me, I set goals of like, okay, I want to see where I can be in 5, 10, 20 years. Not like, how do I make $1,000 today or how do I make $1,000 this week? If you try to do that, you'll start forcing trades when things are not all set up because you're like, well, the week is closing, I haven't hit my goals, let me make some trades. And you start thinking, I need to make this trade. You never need to make a trade. Think of yourself as a retired trader. Only go into the market, only, you know, put a sizable position when everything lines up. You can't say, oh, I'm going to take Tuesday off from work and I'm going to trade today. You should always be looking at the market. Even here in Bali, even with a time zone, like we try to stay awake in the middle of the night. We're like, is there anything hot? Last night I wanted to go to bed earlier, but I saw some good plays, so I pushed myself. I stayed awake. I made nearly $2,000 because there were some setups. You made 4,500 last night, right? Mm-hmm. Did you stay awake a little longer because there were some plays?
Yeah, I was up past midnight. It's tough trading here. It is. Props to everyone on this side of the world who does it all the time.
But notice that we don't need to trade. If we had done this interview and he had made nothing last night, we would have been fine with that. We really try to wait for the best plays. And when you understand what the best plays are, it's easier. The problem most of you guys have is you don't know what the best plays are because you're not studying the past. So everything we teach is interlinked. Let's see. Another question. Ooh, this is from Aaron MF. For someone starting up with a small account and looking for a stock to hold overnight, what are the key points for you to hold?
I don't long overnight too often, but if I were going to, there's really a few things that all have to align. The first thing is it needs to be a green day. It needs to be up a lot, probably one of the top percent gainers of the day. Have a good chance at gapping up the next day because momentum is still strong. In the past couple of years, I've started looking a little more at VWAP. That's value weighted average price. It's a little indicator most brokers can let you add to your chart, and it'll just draw the little line for you. But I like to have the stock above VWAP, where that just sort of indicates to me that it's still on the right side of momentum, where it could continue to squeeze on up. Shorts are still underwater, or the average short, I guess. Strong volume, that's another one I like to see. And then I will do a little bit of fundamental research now, where I look at the SEC filings, and if I think that there's any chance that the company needs money or they might do some kind of offering overnight, I won't touch it. But if they're in okay financial shape, they don't need to raise immediately, then I feel safe holding overnight.
For me, when I hold a stock overnight, I want some kind of catalyst. When I made the $100,000, I knew they were going to be on TV over the weekend. The other day, I was long MGTI on a Friday. Same kind of pattern where it was a multi-week breakout. It was Bitcoin. Bitcoin was breaking out. The problem with Bitcoin is that it trades over the weekend, so it was a little bit of a risk. You don't know what it's going to do when the stock market opens up. As it turned out, Bitcoin spiked 20% over the weekend, so I was in the right. MGTI was a nice multi-month breakout. In fact, I actually underestimated it. It's now spiked like 80%. I made like 20%. I don't mind taking singles. But when you hold overnight, you know, just like, you know, you like the multi-week, multi-month, multi-year breakout pattern.
Right.
You want something where I feel like a lot of traders aren't looking every single second like we are. They're not as meticulous. So when, let's say, a trader comes home from work, or a part-time trader or an investor, and they see some big news headline, or they see some big percent gain, or they see some big sector hype, they're not thinking about, okay, who was in it before. They're just thinking about putting in their buy order the next day, right at the open. And if you get enough of those people, you have a gap up. So what can cause those people to see a stock? You know, a multi-week breakout, news, being on TV, an analyst upgrade. You know, this is why I like buying earnings winners, because a lot of analysts don't upgrade a stock right away. Like, they have to read the report, they have to listen to the conference call, so you get analyst upgrades on day 2. Sometimes journalists don't cover a big event on day 1. You know, journalists make like 35, 50 grand a year, decent salary, but not big money. And a lot of them write about something that happened the previous day, the next day, or 2 days. And then whatever journalist they write for, whatever, you know, media outlet, all those people now see it. So XXII was one the other day where lower nicotine cigarettes are becoming in demand. And there was a press release, and then Bloomberg, I think, wrote about it the next day, and then Seeking Alpha wrote about it the next day after that. So you had multiple days, multiple news outlets. So I like to think like that. It's not an exact science holding overnight. You know, you might buy an earnings winner, and then an analyst might downgrade the stock the next day. So you're trying to get the odds on your side. And then if you are buying a stock overnight and it doesn't gap up, you simply exit. You don't hold and hope. A lot of people don't get what they want right away, and they're like, well, let me just give it more time.
Yeah.
What do you think about holding and hoping?
Terrible. I mean, yeah, just like you were saying, and I will say this also about the holding overnight. I prefer doing it with OTC stocks. I think that it's a lot higher odds when you see an OTC, especially if it's been breaking out like you were just talking about. I think it's much higher odds that the OTC keeps on gapping up and maybe has another strong day.
It's funny how that works. Is OTCs, they're the worst companies out there. They're junk, but
they're very technically pure.
But they move, they move like so based on momentum, because they have like one product and the momentum's either with it or without it.
Yeah.
So it either spikes or crashes. So when the momentum is with it, like it's very slow.
Yeah, and with the listed stocks, I think it's a lot more of a toss-up. And a lot of people will hear, okay, it's a toss-up, and then not want to take the trade. But if you can manage your risk-reward where, you know, your losses are half of what your gains are, well then, yeah, 50-50 is well worth taking. But that's the hard part. And I really struggle with it myself, is if the stock is gapping down the next morning instead of gapping up like you expected, you just got to get out. Like I every time I try to hold or give it a chance and hope, oh, maybe it'll go red green. I mean, first of all, that's a low odds setup, but you know, usually I double my loss at least.
And I'm glad you brought that up, because a lot of people, for example, do cut losses quickly, and then the stock goes up and then they regret cutting losses. You can't regret your discipline, because that's going to save you the majority of the time. Every now and then a stock will do a low odds setup and go red to green. But I don't feel guilty missing that because I stuck to my discipline. If you lose your discipline, you have nothing. If you just hold every time, you have nothing. Maybe sometimes you'll win, maybe sometimes you'll lose, and that's most traders. And on the whole, most traders lose. And this is another thing with odds, you know, like, okay, we have like 65, 70% winning percentage, but I know some traders where they're like, they think, okay, if you have 50-50 winning percentage, you're failure. But if you control your losses, let's say you lose, you know, $100 50% of the time, and then your wins, you make $500 50% of the time. Your overall wins are more than your losses. So it's not just about your winning percentage if your losses are smaller than your gains. If you control your losses. If you let your losses get out of control, then you're screwed. So that's why I'm so crazy about cutting losses.
Right. And to get back to your point about not letting the rare moves frustrate you. That's really hard to do as a trader, but it's something you've really got to work on, is focus on what you could have predicted in the moment. I mean, back when I was really buying pumps a lot, I mean, all the time I would sell way too early. But I mean, if you've got maybe 5 pumps that'll run 20, 30, 40%, and then one that'll go 300%, like I'm not gonna beat myself up that 1 out of 6 times that it really goes nuts. Like, focus on what you could have predicted in the moment. Don't let hindsight frustrate you and say, oh, I should have known, because reality is you probably shouldn't have known. So if you're really trying to look back at the past and learn, think about what you could have known in the moment, I guess, or what you could have predicted in the moment.
And singles win the game. You don't need to go for home runs. You know,
Yeah.
MGTI, I bought it at 133. I sold it at like 163. Made my 20%. It goes to 243 2 days later. I don't feel 1 ounce of regret. I made my roughly $2,000. I sold it well. I didn't even have Wi-Fi. Some Wi-Fi here like blocks Interactive Broker, so I actually called in my order. I was in the right spot at the right time. I nailed it. Capture all of the gains, and that's fine. Singles win. Another question from Mother Truckin' Trader. Did you at first have trouble pulling the trigger on trades, and if so, how did you get over it?
Definitely, yeah. I mean, I would be thinking about taking a trade and my heart rate would go way up. I'd like be shaking. I'd be freaking out. Like, it would be really scary to think about it. And there were quite a number of times where I would just sit there and stare at it. I wouldn't buy the breakout or pull the trigger on the setup that I saw. And then I would watch the stock make the move without me, whether it went in my favor or not. It took time. That really was the main thing for me. It just took time. It wasn't any one thing I did. I didn't like size down. I mean, like, I think maybe you could try sizing down and trading a little smaller to encourage yourself to pull the trigger more. But I didn't do that. I just kind of had to take the time to just get there mentally and be ready. And for me, it was watching, the vast majority of the time that I would have been right. And at a certain point, I just said, okay, enough's enough. I've got to try this time. I've got to pull the trigger.
And for what I see with a lot of you guys is, trading is scary in the beginning when you don't have knowledge, when you don't have a plan. Don't trade with size in the beginning, okay? Don't be afraid to trade small. Your friends, your family might mock you for like having such small gains and you're spending all this time and it's like penny stocks and like it's all a big scam, but you need to focus on the long-term goals. And if you do that right, you take small gains, you take small profits, you practice, okay? Practice makes perfect. So many of you want instant success. It took you 9 months, roughly, to find consistency.
Yeah.
This is the next question. Max Billy Goat, I love these usernames, says, what really sparked your consistency after 9 months?
And it was doing less, which is so counterintuitive because you think, okay, the more I trade, the more I'll make. But for me, that's what led to my downfall at first, because I was trying to do like 8 different setups. I was all over the place. I wasn't really good at any one thing. And I bled myself away trying to short sell something that I didn't really understand. And my aha moment, like that really clicked things for me, was when I realized I'm trying to do too much. And I had been tracking my trades, which every single one of you should be doing. And I was able to go back and look. And I kind of knew in my heart like where I was comfortable and that I was more comfortable buying than short selling. But I was able to look at my results too and kind of confirm that and say like, okay, when I bought this breakout, I did well. When I bought this new promotion, I did well. When I tried to short sell this, I lost badly. And I had dozens of trades at this point to look at. So I saw where I was good, I could kind of feel where I was comfortable, and that's why I just focused in on 2 setups where I was best, where I was most comfortable. And I stuck to it, and I ignored all the other noise, all the random chat room plays, all the people kind of beating their chests saying like, oh, I made so much money short selling this. Like, I don't care. That wasn't me. That wasn't what I was trying to do. So you've got to focus on you. Don't let anybody tell you what setup you should be trading. Like, you need to discover that on your own. You need to figure out where you are best. And you focus there, you get consistent, you grow your account, and then once that setup is like second nature, then you branch out a little bit. Maybe you add something new to your arsenal. And I just kind of let one thing naturally lead to the next for me. So once I got really good at buying, really good at timing my exits, I started to think about short selling and say like, okay, I'm starting to realize I'm calling the tops okay on this. So now maybe I'll start trying to work on a short selling strategy. And I just branched out one setup at a time.
And it's a progression. Roland just started doing this where, he made roughly $150,000, $160,000 on longs. Now he started inching in on shorts, and he nailed the JMEI short the other day.
Yeah, I missed that one. He did
and
great.
I missed it too. And now Roland is doing that. So try different strategies. And I'm a big proponent of really just starting small. Like I really just use a laptop. Can you see the laptop? Can they see the laptop? Right? This is it. I don't need 10 monitors. I'm like focused on like 3 or 4 big percent winners of the course of the day. I know you want success, but a lot of what works best in trading is counterintuitive. Like it's similar to golf, I guess. Like, you know, if you try to hit the golf ball as hard as you can, it won't work. And some of like the people who hit the furthest golf balls, like they're fat, they're unhealthy. Like it makes no sense. Like it's very a controlled approach, and they hit the ball further because they have like the proper control, the proper skill. It's not about power in golf. And the same thing with trading, where you don't need 50 positions, you don't need 50 monitors, and if you want a lot of monitors, that's fine, and if you want a lot of positions, that's fine. But for me, what works best is keeping it simple. You know, 1 or 2 positions, both long, both short. I have trouble when I have like 1 long and 1 short, and I'm trying to like judge based on, you know, 1 stock going up, 1 stock going down. I can't keep track. I like it very simple. So I'm glad you brought that up, you know, when you started doing less. And I know everybody wants to be profitable, but you have to study more rather than trade more. Trade less, study more. That should be a bumper sticker.
Definitely.
All right, let's get to another question. Vinny D's 98 says, when you blow up your initial $1,500 account, how did you change your mentality? Because this is the good thing. So he actually lost his initial $1,500, and I have many students who lose some or all of their small amounts at first. This is why I say start small, because it takes time to get used to it. What did you do?
Yeah, it's exactly what we just talked about with just scaling back, doing less, figuring out where I was successful, where I wasn't, and cutting out what I was bad at. That really was as far as I had to go, as far as changing my mentality.
So you have to try different strategies to learn what you're good and what you're bad at. And this is why, you know, I'm a fan of stocks to trade with the paper trading. You don't get the full education when you're using fake money, but at least you can test out different strategies. Using real money helps. So even if you want to trade with like 100 shares or, you know, 200 shares, something where the money isn't going to be so meaningful, win or lose. Too many people, you know, start too big too quickly and they lose big, and then they're like scarred for life because they're just like, oh my God, I just lost like, you know, my whole mortgage or something like that. And then you're in this mentality where you're so far behind and you're trying to catch up, and you just have the wrong mindset and the wrong priorities. If you can focus on not making money right away and just learning for like 6 months, that would be amazing. Like, don't trade with money that you need for rent or food. I get so many people, they're like, I need to make this money in a month. Can I learn everything? And no, you can't. This is something that's gonna change your life forever, but it is very front end loaded with studying and preparation.
So, I mean, yeah, like let me just say this. Like, if I started over today, like if I was a brand new trader, I don't think I'd do much different than what I did the first time. Like, I mean, I know these are kind of conflicting ideas. Like, on one hand, we're saying be very selective. On the other hand, we're saying try different things, learn about yourself. So, I mean, what I would do is I'd start very small. I would trade, you know, I guess I'd study first. I'd learn a lot of different strategies. I'd try to figure out which ones sounded good to me, which ones made sense. And then I would dive in and I'd try a bunch again. Like, I'd be trading them very small once again. I would be trying different things. And then I would let my results guide me and cut out what wasn't working. And I know the natural question, like, and I get this all the time, is like, okay, well, what strategies are best? Which ones should I really focus on? And that's not for me to answer. That's not for Tim to answer. There's endless strategies out there for you guys to potentially learn. And you've got to answer it yourself. What are you good at? What makes sense to you?
Question, did you have any prior knowledge of finance before getting into trading? Romina D says.
I was a finance major, but I can't say I really learned anything there that would have helped me with penny stocks. I dove into the market pretty clueless and just kind of found my way.
MKO says, how do you find good stocks to trade?
I use stock scanners. I mean, those are really powerful tools where you can input whatever criteria you want and find the stocks you are looking for. I mean, maybe you're the trader who likes to buy bounces, and so you can scan the market for stocks that are down huge. Or maybe you're like me and you want to buy breakouts. So I'm scanning for stocks that are near their highs, and then I'm looking at daily chart patterns, looking for ones that are nearing breakout levels. But yeah, get a stock scanner, use a stock scanner, because it really can help you find what you're looking for.
And I would encourage you guys to focus less on news than, price action. Price action is king. Like, scanners don't, you could scan for news. I wouldn't do that. I would scan for specifically big percent gains. That's what I look for over different time frames. But if you look for that, those are the stocks that are in play. Companies will say anything to get you to believe in their technology and their product. They'll say, we have this great deal, we signed this letter of intent, we have this big contract. Almost all of the stocks, especially penny stocks, are full of BS. Almost all their deals will somehow screw up, and they'll make excuses later on. But those of us with money, those of us, who are experienced, have seen so many failures, so much BS over the years, we just ignore it. What we don't ignore is big percent gains and breakouts, because that is what works.
And that's the market telling you that the news matters. A problem I see a lot in the chat room is people will say like, oh, like such and such company has news, like they announced a contract win, this could go up. And then if you look at the stock and it's doing absolutely nothing. In fact, maybe it's sold off most of the day.
And it's been downtrending all year.
Right. Like that's a great example of something I would never even consider for a trade. Now, if it's a company that announced their contract win and they're gapping up and there's increased volume, that might tell me something's going on there, and that's worth looking at. But a chart is nothing more than a visual representation of what the money is doing. And so
follow the money.
Follow the money, yeah.
Good. How do you stop yourself from over trading, says Cream TV?
I've got a dartboard in my office, so I'll definitely take some midday breaks to play darts with my wife. I used to watch TV shows a lot, just stream random stuff midday just to distract myself, but it's not that difficult for me anymore. At this point, I've gotten really good at realizing either the setup is there or it isn't.
It's very difficult for me. I'm a confirmed addict. If any of you have ever eaten dinner with me, I have a problem not ordering the entire menu. I can't help it. That's just who I am. So I like to travel to ridiculously exotic locations where the Wi-Fi is weak and the time zone sucks. I'm kind of serious though. I like to make myself so busy so that, if I'm out here in Bali, like I want to go explore. I don't want to stay up all night. I will if there's like a great trade, but that's how bad of an addict I am. I physically have to like force myself into situations where I can't trade all day. And if you look at my stats, when I travel, I actually do better. I have higher winning percentages. I choose better trades. So if you have a dartboard, if you travel, whatever it is, I like to also think of myself as a retired trader, where obviously I'm not a retired trader. I'm trading almost every day. But if I think like that, and I only come back into the market where I'm like, oh my God, this play is so good, the setup is so clear that I would feel guilty missing this. That helps me from over trading. And the PDT rule is good for a lot of you guys. When you have small accounts, it prevents you from over trading. You have plenty of trades. 3 day trades per week is more than enough for a small account. If you hold the stock overnight, it's not a day trade, so you can do that every night.
At the end of the day, the setup is either there or it isn't. And the traders who make it are the ones who can just sit on their hands when the setup isn't there. So, if you're the trader who, just takes something because it's moving and then later says like, oh, I couldn't help it, like I had to do something, like you're probably not going to make it. So, we can't get in your heads. We can't, maybe Tim can tie you up and keep you from trading, but
Steven Johnson.
But you've got to learn self-control. That's such a big part of this game, and either you've got it or you don't.
It really is you versus yourself in trading. It's mastering your own mind and your own discipline. And I know that sounds corny, but it's true. Like, it's not the market. The market will always be there. There's always going to be plays. There's always going to be some hot sector, up or down, long or short. It's you. Are you prepared to trade? Are you prepared to have the patience to wait for the best plays? When there are the best plays, do you have the knowledge to properly play them? Do you have the control to take singles instead of going for home runs? Do you have the discipline to cut losses quickly instead of letting a small mistake turn into a big disaster? You put that together over and over again, you try to build up your account. That's how it is over several years and decades. This is a marathon. It's not a sprint. The reason why we make videos like this is because we want you to be in this game for years and decades. because that is how you have the most success in anything, and not just in trading, in teaching too. I mean, I was teaching, this is my 10-year anniversary, right? 10 years, hey! But I didn't have that much teaching success until really like year 5, year 6, year 7, when people started seeing everything, like seeing there's a lot of plays, there's long and short. In the beginning, I didn't have the best, strategy for teaching. I was like, this is the way to do it. There's only one strategy, nothing else. I've become a lot more open-minded. So you adapt over time. That's what this is all about. And it's about not blowing up in the process, taking small gains in the process, not getting discouraged by small losses. What do you think about this? Because this is very common. A lot of people lose small amounts. Maybe they lose 7 out of 10 trades, $20, $50, $60, and they get discouraged. How do they stay on track? Because for me, small losses, I don't worry about it. Not even just because I have money, but just because cutting losses quickly is part of my discipline. But a lot of people get discouraged. What do you say to that?
I mean, turn the losses into a positive experience. Like, the losses really can be learning experiences, and that's why it's so important to track your trades and figure out, are you losing at one setup over and over and over again? Are you trying a lot of different things? Like, why are you losing? That's the question you have to be able to answer. And if you're tracking, you should be able to answer that question. I mean, either you're trying a setup that just is not consistent, it's not a well thought out plan, you need to change your plan and, just adjust what you're doing. Or, maybe you're just trying to do too much and you have no real structure to your trading. But, losses can be the best learning tool. They have been for me, that's for sure. So make them count for something.
No trade is wasted. Every trade is useful for something. You're either going to get richer or you're going to get wiser. So both of them are useful, and you can't have just profits. That's not a complete journey. And
right.
If you only have profits, like I didn't have a big loss until my big $500,000 loss in Cygnus, I didn't have the full education. So I was successful, but I was setting myself up for failure by not being prepared to cut losses.
One thing you don't want to do is look at every single loss like a failure and, I'm doing something wrong. Because there are a lot of times where good setups just won't work. So don't take a loss like on a multi-day breakout and say, the multi-day breakout pattern is bullshit, I'm never going to trade that again. Like that, again, that's where it comes back to tracking. If you see that you're losing on that, only like 2 out of 10 trades, like that's fine. Like sometimes it just won't work.
Losses are part of the journey, and you cannot have the journey without losses. So be prepared for losses. All you can do is manage them. Mm-hmm. That's the thing.
Yeah.
Okay. Last question. We got to get going to lunch. Best place to look out for growing a small account of 1,000 or 2, says Eddie Murphy. Of course.
Of course. I love multi-day breakouts. That's one of the only long strategies that I'm really like gung-ho on. Like, yes, go for it. If I started with a $1,000 account, I would play every multi-day breakout that I could. Other than that, that really just might be the one. I talk about 1 to 2 patterns early on. Like, that'd probably be my one. Is I'd just be buying and slowly growing my account with breakouts that don't happen often. I might only be making a trade or 2 a week, but it'd be a high odds situation that I'm comfortable with. And maybe in the meantime, I'm tracking other stuff, looking for other angles to exploit. Short selling, I probably couldn't do much with $1,000. You said $2,000 is the minimum. So, I guess I don't buy much, so I'm not good with long strategies. So I'd have to get back to tracking and figuring out what other angles could I find, and maybe add one more setup to my arsenal.
So for me, he likes buying breakouts. I buy breakouts too, but I'm more comfortable with my dip buys. When you have these 30, 40, 50% panics in a morning, I've done several video lessons on them, especially on pumps. The first crack, not just dip buying randomly, not buying bad news, but if there is a pump and dump, if there is a promo or some stock that has gone up for 3 days, 5 days, a week or 2, and they crash all of a sudden and it takes out several stop losses, like, let's say the stock has gone from 1 to 6 over a week, and it takes out stop losses at 5, 4, 3, and you see this 50% drop on no news. It's only stop losses. Maybe like the promo got like a skull and crossbones, like a caveat warning. Maybe there is some bad news, but if you have all those stop losses getting taken out within 10, 15, 20 minutes, that oftentimes represents a very good dip buying opportunity. Understand it is very scary. I'm not just saying dip buy anything. I'm not just saying dip buy and hold. But when you see a stock that's starting to bottom. And if you look on the level 2, if you start seeing kind of like, if you look at my Learn Level 2 DVD and you see the wall of sellers and it starts getting smaller and the wall of buyers starts firming up, ideally at a former support level, you might try to dip buy, let's say 1,000 shares or 500 shares, and try to make $200, $400 within an hour. We've seen these dip buys, bounce 20, 30, 40, 50% within an hour, sometimes even 100%. Even yesterday on RTNB, terrible news, terrible company, terrible stock. It dropped from 380 down to 150, and yet off the lows, 150 to 280. So you could have nearly doubled your money between pre-market and by like 10 a.m. Eastern. So it's not like, a fundamentally sound strategy where like I'm buying good companies, I'm buying terrible companies, but taking advantage of market mechanisms. These stocks crash so quickly because of stop losses, because of panic selling. That opens up a little opportunity. RTNB actually did bounce to 280 and then finished, I think, at 220, was it?
About, yeah.
So there was a dip buying opportunity in the morning, but I really like dip buys in the morning only. I will not dip buy a stock that's panicking into the close. I will not dip buy a stock that's panicking and closes low because it might get, crushed the next day or halted overnight. I wouldn't even hold these kinds of stocks overnight. I'm specifically dip buying them for a very quick bounce. And if there's no bounce, I cut losses quickly. Sometimes I take 2% gains or 2% losses. But a lot of the time I will capture 20, 30, 40% gains inside of an hour. Do you ever do those dip buys or no?
I used to with OTCs when they were really liquid.
Yeah.
And I could use that level 2 and kind of watch the stacking action you were talking about. I don't do it with listed stocks. I hate dip buying listed stocks. I see you do it sometimes.
Yeah.
So that's a good example right there. I'm the breakout buyer, he's the dip buyer. Like, figure out who you are. Don't let us tell you which one you should be.
And there's multiple patterns. Stephen Ducks likes shorting like you do, and he likes dip buying like me. He's like the Chinese clone of both of us combined. It's kind of crazy. You need to just try out different strategies. I'm a big fan of what you said about that, where you test out different stuff and you see what suits your personality best. Like, there's no one magic formula. There's no one magic strategy. Even if a strategy has made me $1 million, my first million was buying pumps, and then that disappeared. Then I had to adapt. I made my second million basically shorting pumps. You used to buy pumps, now you're trading NASDAQs. So as a trader, you must always adapt. You can never say, oh, I have one strategy for the rest of my life. Although you will find that the original strategy or variations of that strategy will come into play again and again. So no strategy, I think, really ever dies forever. It just gets reincarnated and comes back in different ways.
Okay.
I don't know. One last thing. Do you have anything to add to these people? Let's see. We answered a lot of questions.
Oh, man. I think we covered it.
I agree. There will be no more questions. Now, you can ask me questions later on, but we wanted to just answer a lot of FAQs. I know this can be overwhelming and complicated for you in the beginning. Trust me, it gets easier. As I said on my Trading Challenge webinar, I've never had a student who's been studying hard for 2 or 3 years and saying, I still don't get it. It's like people who have been studying for 2 or 3 weeks or 2 or 3 months or even 5 or 6 months. If you give it time and you see more and more examples, it gets easier. You can listen to us all day long, but you have to see this stuff in real time. It's very easy for us to talk about these pumps and big percent gains. When you're seeing it in these big gains or losses, if you don't cut your losses quickly in real time, shit gets scary.
Oh, yeah.
And if you're using your hard-earned money and it's on the line, your mind will go blank if you're not properly prepared. I don't want you to be a deer in headlights where your losses are just growing and you're afraid to click the button. You need to get to a point where you're so trained, okay, I need to cut losses. I will click that button. No hesitation, because every second you hesitate in a low odds setup or a trade that's going against you, that can just add to the potential damage. And I don't want that to happen. You must always guard against blowing up. All it takes is one bad trade. If you go all in, if you get too cocky, if you use leverage, if you think that you're better than the market, one trade can wipe out years, decades of hard work. So while trading isn't as scary as you might think, you do have to be on guard with your losses. And that's my best lesson. There's always going to be enough volatility where you can profit 10, 20, 30, 50% in a day or two. But guarding against losses, guarding against blowing up, guarding against getting discouraged along your journey. Those are my big things. So thank you again for joining us. Congratulations on the Tim Grittani School. We're gonna play some footage that we got. This guy just opened up his first school. We're building schools all over the world. I hope to teach you guys. We have students now in nearly 100 countries. You can do this from anywhere. Long live the internet laptop lifestyle. Cheers.
And the Tim Grittani School, which Tim Sykes has kindly funded and dedicated it to Tim over here. So we'll be there for an hour and then we'll head a bit further down the mountain. I'm not sure if people will be dropping off then, but we'll then head to the Michael Good School, which is another school that Tim's funded and dedicated to his friend and student, Michael Good. And that's on the coast. We'll be going on a really interesting drive right up the mountains, down the other side. Halfway down the other side is the first school, and then at the very bottom of the hill you'll see the second school, which is next to the seaside. And you can see some before and afters there as well. So,
amazing.
Nice to meet everyone this morning.
Yeah, let's get driving.
Good day.
From Bali Children's Project. It's an amazing, amazing thing that you've created for us, and we're really proud. The children went to school in a closet.
This was it for 19 kids and a teacher in this.
And now they have a whole building and a whole school and a playground. You can check out the growth on Instagram. We did it from before when they were in a closet until now. Thank you, Timothy. Thank you, Timothy. Thank you. Do you want to cut the ribbon for your school?
Yes.
Okay.
That's sweet. You'll open that.
Ice cream for everybody.
The whole box. Take the whole box.
Yes. Let's
Ayo,
take this whole
ayo,
thing.
Pak, letak Pak. Itu berapa itu es krimnya untuk semua anak-anak?
We're getting some ice cream for the kids.
Yeah! Ice cream for everybody. Let's give them more. Here you go, guys. Who wants ice cream?
Take your ice cream. Ayo,
Here you go. Yeah, we just give it to everything.
Dua-dua.
dua-dua.
Just take it. He's counting. He's scared.
Here you go. Hey!
She has never in her lifetime
up? It's good. We got some ice cream for the kids. We opened a school, the Tim Grittani School. We gotta get going. We gotta go to the Michael Good School. We're opening schools left and right. Thanks to the Bali Children's Project. Thanks to everybody for coming. Let's do it. Hey, what's up? Tim Sykes here at the Michael Good School. I got tired of naming schools after myself. Now I'm naming it after my top students. Earlier today, we visited the Tim Grittani School. He's my second Millionaire student. Michael Good is my first Millionaire student. They now both have schools. Tim Grittani actually came to Bali. It's actually kind of an amazing thing to just be here. You know, this has been years in development with the Bali Children's Project. You'll see photos, you'll see videos of all the amazing people who, you know, were part of this. You know, we're having fun here. It's a joyous occasion to open a new school. We visited the other school, now we're visiting this school, then we're going back. A few of us are going to a waterfall. I need sleep because I'm also giving a live trading challenge webinar with Tim Grittani in like 5 hours. So I need to get some sleep and I don't know, I love my life. I've been to Bali a few times now, and you guys are just amazing. Like the people, the food, the culture, and I'm proud to be able to, you know, help bring a little education. And this is the Michael Good School. You might see pictures of him. I'm so excited to open this school and more schools because education is so important. And I want you guys to take, you know, your education very seriously. All you kids and all you parents, please take advantage of this new structure. To announce that I'm going to donate another $100,000 to you, Linda, and you guys, everybody at BCP.
My name is Tim Sykes, and I teach people to trade stocks. I am a self-made multimillionaire.
So this is the ideal trade that I'm going to talk about. I want you guys to understand every single aspect of this trade.